following the momentum can really pay off even in this market. Joining us today is Pete Carmasino with Chaikin Analytics. Pete, so glad to have you back on the show. I'm really excited about the stocks you have for us today and really this kind of case study of looking at stocks in the market that are up and to the right, that are doing really, really well and still being able to gain some upside even when a stock's near that all-time high. You've got a really good case study for us today and then 3 new names that are similar stories, 3 names with lots of momentum that still have a lot of potential growth ahead. So Pete, let's get right into it today. Let's talk about that stock you brought us the first time you were on our channel just a few months ago, back in October. It's been doing really well.
Absolutely. It's great to be here. Thanks for having me again, Bridget. And the name was Applied Materials, symbol AMAT. And we talked about it as around in the 220 range or so. Already had a big move sort of behind it, like a lot of things did last year. I mean, think about what happened. We just saw, the AI trade kind of rip, and everybody became investors and obviously researchers to find out which names were really going to be benefiting from all of this capital expenditure that was going on. And along the way, you saw the typical names rally, the main semiconductor names like Nvidia and AMD and some other names, but you started to see these equipment names kind of like wake up and start to rally. And that was Applied Materials sector, sort of subsector of the AI industry that I don't want to say was overlooked, but it still had a lot of room to run. A lot of folks are saying valuations were getting too rich and things of that nature. But AMAT, to me, probably still has legs even further from these levels that it's gone up. It's gone up 100 points since we talked about it. So the point being is that I think the tailwinds are still pushing these up and to the right.
Such a great case study, AMAT. Looking at this chart, again, we talked about it October 23rd. If you didn't watch that video, you definitely should. We'll put that link up here. You can watch it after you watch this one. But we talked about it having a lot of momentum and a lot of growth potential. But when we were talking about it, it was near that 52-week high. It was above probably the consensus price target where analysts were predicting it would go. And then we saw just in a few months, it go up so much already. Again, it's a great case study for what can happen, especially in any stock tied to the AI market right now. Before we get into the 3 names you have for us today that are all similar stories of stocks that are already running up but still have some potential ahead, Pete, just generally, I want to talk about what investors should be thinking of when they're really getting into this AI market and what analysts have to say and what those valuations might be. Are there any concerns to look at, or are sometimes the maybe analysts and what the market is thinking about these stocks not truly catching up with how rapid this demand is growing?
Yeah, that's a great question. And a lot of analysts, tend to be conservative on the side of, erring on the side of caution and potentially looking at areas or sub-industries that may either have been overlooked or some that might be, they use this term, overbought. In other words, it's too sort of a crowded trade is kind of the jargon a lot of people will use. But the investment trends here are massive. We're talking about a pro-business administration that has passed tax incentives for businesses to spend on, on equipment and manufacturing. Now, that's not just AI, it's every industry. So every industry is basically benefiting from this in some way, shape, or form. So the point being is that a lot of folks feel like, all right, this trade has maybe matured very quickly, but at the same time, that's how capital flows, right? It wants to be first. Institutions were I think, ahead of retail in some respects, but when retail catches up, it really pushes the narrative to, I would say, sometimes extremes. However, the investment trends here are there supporting it. We're talking about last year, I think the spend was close to $400 billion between all the usual suspects, the Microsofts, the Googles, the Amazons, and so to speak. However, this coming year, the estimates are still in the $500 to $550 billion range. Again, that's capital expenditure just on AI. So we're seeing growth there. Obviously, the initial push is massive. And then obviously the next year and the year after, it might feel like the spending is slowing down. But all of these equipment names still have to catch up. They still have to build, their products, deliver them. And one of the names we're going to talk about today is the one who's testing some of these chips and really helps some of the chip makers to make sure this multi-billion-dollar bet that they're making in selling these chips, that they work, right? So you have to be able to understand why businesses are making these decisions so quickly. And it's because they have certainty in the tax incentives that are provided in that one big beautiful bill act, over the summer that was passed in July. But that's a permanent 100% bonus depreciation deduction for companies they can take immediately in the year that they spend it. So $400 billion spent between all the names I talked about, the hyperscalers, they get to pull that off the top of their revenue and they pay less taxes. And all of a sudden, the monetization of these data centers is a little bit easier because of the incentives. So I think that the incentives here are really going to be pushing. And unless that changes, I really feel that you're going to see the CapEx continue to grow.
Yeah, I think you've hinted towards a lot of things. I'm really excited to dive into a lot of them, including that first company you have for us. But there's one elephant in the room that I don't want to miss today, and that's all of the volatility in the market that we're seeing on Tuesday. I want to get your take on some of the red we're seeing in that heat map today. A lot of stocks pulling back, the overall market pulling back with those tariff fears, the geopolitical tension fears going on in the market. Do you see this as a potential factor to slow momentum, even in some of the momentum names we're about to talk about? What's your take on that potential volatility and what investors should do?
I think that the word that you should associate with volatility in this market is opportunity. And so when you see it, obviously it's hard to predict exactly when it ends or how far a stock might pull back. But that's what we use technical indicators for. So you want to look at the long-term trend. You want to make sure that, things aren't changing, that there isn't some narrative that changed for that company, specifically the one that you might be watching or the ones we're going to talk about today. But at the same time, there's a lot of, things up in the air geopolitically. We're talking about Greenland, we're talking about new tariffs, on wine and things of that nature. It's just a little bit of a noise, right? It's not so much a signal. So you do have to sift through those headlines sometimes and say to yourself what do we know today for sure? So something I ask myself all the time, what do I know for sure? What do I know for sure is that the incentives there are to spend. AI is growing and we are in the early stages right now. So volatility, I think, really means opportunity now.
An interesting way to look at this week, and I think there's plenty of investors out there that are doing exactly that right now. Well, let's jump right into your list. I do want to share Pete is a part of Chaikin Analytics. We talk about the power gauge when we have Mark Chaikin on all the time, and you have an opportunity to have a free look at what the power gauge has to say about all three of the stocks we're about to talk about here today. I've got the QR code up here and a link in the description if you want to go ahead and get that free look at what the power gauge system has to say about these stocks. It's a great way to really dive into the research on these companies and a different perspective for how to look at these stocks we're about to talk about. All right, Pete, let's get to this first company. I'm excited about it. The chart looks very bullish, and it's also a name we have not heard about on the channel before.
Absolutely. It's the symbol's ONTO. It's Onto Innovation. And this is basically the quality control company for semiconductors. Now, there's a bunch of companies that do that, but Onto it's a smaller name out there. I wouldn't call it overlooked, not recently anyway, because it kind of looks like Applied Materials did back in October, where it's had a big move. They've got a nice relationship with Taiwan Semiconductor, and Taiwan Semiconductor is building new manufacturing facilities. And this is exactly what I said back in October. The more you start to see deals and new manufacturing and new facilities and things of that nature, you've got to think, okay, more chip production is coming. That's that compute word that everyone's talking about. And when you hear more chip manufacturing, you should automatically go a layer lower, right? And find out who's testing this equipment. It's Onto. ONTO, the stock's trading around 220 or so. I do like the name, potentially pulling back here, but I thought we'd get an opportunity on the name, but today, again, on Tuesday, as we're recording, it looks like it firmed up rather quickly, because I'm telling you, the investors here that are in this space are doing what I'm saying that I'm doing is, what do I know for sure? What I know for sure is that capital expenditure is probably going to continue growing and increasing in spend. That's going to help names, again, in sort of the food chain that are the equipment names like Applied Materials, and then the people who are testing these chips like Onto it.
I think that's a really good point, that even on a day like today, when most of the market is down, this name and really the other two names that we have coming up on this list today are all still in the green. So I think that shows that the momentum is going for these stocks no matter what happens in the market right now. Not that that can't change in the future, but I think that that's something that stands out for me specifically to talk about these names today, because the momentum is still strong. One thing I think investors, I hear from our viewers all the time is, well, it's run up so much. It's way above where analysts say that it should be right now. Do you have any fear? Does that slow you down from investing in a stock like this?
No, as I said, I mean, I certainly would all like a better price, right? That's sort of the definition of investing, right? So you want to try to get in as the best price as you possibly can. However, when opportunity is striking like this, you may want to wait and try to get a name, or maybe take a smaller position when you see names like this move higher. But again, get exposure to it in some way, shape, or form. You can use a lot of different methodologies to get involved, but sometimes a partial position is a good idea. As long as you're involved, you're going to pay attention to it. Believe me, this is an old trick a lot of investors and a lot of traders did years ago when I started in the business, is that they take a small position for information so they don't forget about the name, because there's so many names coming across our screen that we're looking at daily. There's news breaking and all kinds of things happening. Don't forget about these names. Put them on a watch list, take a small position, and potentially take a better position if you get a better price. But it's just hard to know when and if that's going to happen. That's part of the problem of kind of racing into names like this. But if you go back, here's a great tip. I just thought of it. Zoom out a little bit. Look at a 5-year chart on a name like this. Onto Innovation hasn't even hit its all-time high yet. So is there room potentially? And I think it's probably, once it gets there, you're going to have less resistance overhead, meaning less sellers, so to speak, and probably more buyers at that level.
Yeah, this is such an interesting name. And speaking of the watch list advice that you just had, I always choose one stock to add to Bridget's Buys watch list. It's my paper trading watch list on MarketBeat.com. And I'm interested in this stock and the other stock you have for the end of our list today. Both are names we hadn't heard of before, but this is the one that I think I'm going to add to Bridget's Buys for this video, simply because there is so much momentum. It's an interesting company, and I do buy into the demand that you just talked about, that there is a need for this. There's those contracts happening. And so I'm hoping that it does well. And I'm excited to watch its progress on Bridget's Buys watch list. This next name that you have for us is already on my watch list, and I love to see it every time it pops up.
I mean, this is a name that just, I felt it became sort of left behind, so to speak, right? Because Nvidia kind of overshadowed it, and it's kind of in the same, almost identical space, and gaming and, computing power and things of that nature. But AMD really started to break out right around the midsummer area. I would say somewhere around $120 to $130 a share is where the breakout started. And really, it's never looked back, and it had a big gap up because of news in October. And it's really consolidated. I do like this opportunity because at the same time we saw Applied Materials running hotter, AMD took a bit of a breather. Now, that's normal for a name like this, and it has, potentially consolidated. All that means is it stayed in a pretty tight range, I would say, since the middle of November. Don't forget, we had a big sell-off in November, and things recovered, and the upward trajectory started to move higher again in the markets overall. But AMD is really, in my book, consolidating, and I think we're seeing on our system right now a relative strength breakout today.
Yeah, the AMD is such an interesting story, and it does have the ups and downs that we see in some of those really large semiconductor names. So it seems very typical of the field. But another analyst, another MarketBeat analyst we have on the show all the time, is very bullish about the future of AMD. It's great to hear that confirmed from you and the Power Gauge as well, that AMD is another name that's just going to continue to have some strong momentum. Again, if you want to see what the Power Gauge specifically has to say about AMD and the other names we're talking about today, you can scan the QR code, click that link. It's a free look at, again, a lot more information on what the Power Gauge at Chaikin Analytics has to say about the names we're talking about today. All right, Pete, let's get to that last name. I'm not giving as much time to AMD because we all know what that stock is, but this last one is very different, and it's not one that we've talked about before on this show anyway.
And this one's on semiconductor, symbol ON. And when you look at a 1-year chart, like I'm looking at right now, I see basically a range. Again, it was selling off into April like everything else, right? But since then, it really had a range between 41 and somewhere around $60 to $61, about a $20 range. What that's doing is, again, consolidating, but it's starting to move up to the upside. I've got a relative strength change here in our system on the Chaikin system that we use. I've got a very bullish rating, and I got a name. Again, I don't want to call it left behind, but certainly seems like it has not rallied anywhere near as much as some of the other names. Now, don't forget, it's not as a powerful name in the data center sort of infrastructure. However, it's in the data center infrastructure, and eventually you're going to see names and money flow to this particular stock. Again, I've seen this set up on charts before 100 times, maybe 1,000 times in the last year. And when I see this, I've got to take notice and actually talk about it. So on semiconductor is really nicely set up here moving into, I think, in the first quarter of 2026.
So technically, this stock is really good, but let's talk about some of those fundamentals and just what's behind this company a little bit too. Where does ON kind of fit into the cycle of the data center buildup that we're seeing in the country right now?
Somewhere toward the end of the data center build, not completely, but they sort of are on that list of, things that are eventually going to be put into a data center, right? So they're not so much last to be bought, but it's just later in the AI data center trade than the obvious first call names that we talked about, like AMD, Nvidia, and so on and so forth. So it's kind of sits in the power semiconductor layer that kind of usually lags what would be called your GPU orders by about a phase. In other words, in the phase of the build out, could be, if it's 3 phases, they might be somewhere between phase 2 and phase 3. Now, looking at this is something that is really interesting to me. When we look at sort of the overall 20 factors, and one of the factors is analyst rating trend, and it's a little slow. I love to see this, by the way. I love to see analyst rating trend on our system, the way that we rank it specifically, a little behind the stock. Why? Because to me, there's future opportunity there if it starts to get an upgrade. And obviously, with earnings coming around here, we're obviously in earnings season, so volatility is going to come from headlines. But I always say this, earnings are going to talk about what has already happened, but it's more important to talk about what's going to happen. And I think on semiconductor can be in that sort of phase of where you start to see more build out of data centers being completed. And don't forget, these data centers just started being built. It's not a pop-up data center. It takes, a year maybe to build these. And so on is probably going to start seeing better visibility into 2026. And I think the stock is telling a story right here. And that story is it's consolidating and ready to break out.
It's an interesting story about investing in data centers and looking to see that payoff. It's similar to what your colleague Mark Chaikin said in an interview we just did last week, where he talked about the Mag 7 stocks and whether or not that investment they're making into data centers is going to pay off for their stock prices this year. Make sure to watch that video too.